Hello, Maverick traders, and welcome to today's currency recap. It is January 26th. So the equity rally continues, and I have some interesting charts to show you in the S&P 500 and the total world stock index. So the fourth quarter GDP results came in, and they were better than expected, and the risk-on rally continues. So we've got this S&P chart, and as you can see, we have broken out of this neckline that I pointed out on Monday. So we've broken out of this inverse head and shoulders pattern. There is still a lot of work to do. I think the 4100 level could potentially be stiff resistance, and I don't necessarily think that the pattern's been validated quite yet. But if you wanted to take a flyer on the bullish side and you're looking for a good long-term risk-reward proposition, I think there are worse trade setups out there. I still have trouble buying into this on the long side. I just don't think this bear market is over yet from both a technical standpoint and a macro fundamental standpoint. But I can't deny that we've been rallying fairly intensely over the last several sessions. So it remains to be seen. Obviously we are going to have a pullback at some point. I think the nature of that pullback is going to be very illustrative. So if we get a controlled pullback in the S&P 500, like a classic bull market pullback, then I'll look to play the next leg higher. On the other hand, if we get what I think is going to happen, which will be a violent reversal, then I'll be looking to position myself short. And it's exactly the same thing in total world stock index. We have obviously natural resistance coming in at 102. We're quite a ways away from there. The difference between this chart and the S&P is that VT has cleared prior resistance in today's session by gapping higher, and the peak of the left shoulder coming in just around 94 will be the next major target, so not that much higher from where we are now. And in the crypto basket, nothing new to report here. We're still stalling against this prior high. Like I said, even if Bitcoin and cryptocurrencies as a whole have put in a long-standing bottom, we're still quite overbought right now, and we do need a healthy corrective sequence first, more than likely. So on the balance of everything that I've just walked you through, I'm giving the market a +2 here. We still need the 20 and 50 moving averages to cross over to the upside, and then we've got our positive slope. In terms of news, tomorrow we have core PC price index data coming in hot at 8:30 a.m. Eastern time. So let's see what that print says. Taking a look now at currency analysis, cryptocurrencies had a fairly quiet day on relatively speaking. The Bitcoin Cash was up, Cardano was up, Litecoin and Ripple were down. Ethereum, as I'm recording this, down 0.5%, which isn't much, and Bitcoin virtually flat. Over on the fiat currency side, we have the commodity currencies outperforming. This time it's the Canadian dollar leading the charge, which is interesting considering the Bank of Canada has signaled that they might, very well have reached their terminal ceiling as far as interest rates go. But of course, they'll have to wait and see what their counterpart, the Fed, does. If the Fed signals that they're going to continue hiking rates for quite some time, the Bank of Canada might be forced to follow suit. And then on the underperformance side, we have the European currencies, specifically the Swiss franc and the euro, that have underperformed. The yen, the biggest loser on the day, the pound and the dollar more or less flat. From a velocity score standpoint, I really like the commodity currencies relative to the yen. We're going to take a look at those in just a moment. And then on the European side, on the dollar side, there just isn't that much velocity to speak of one way or the other. Looking for continued weakness in the Swiss franc might be okay, but I think the yen is a more interesting proposition. So we're going to get into that right now as we take a look at some currency trades. So taking a look at some possible trades here. So we've reached the next resistance zone that I highlighted in the Aussie dollar at the beginning of the week. I'm very curious to see how we perform as we reach that resistance zone. On the daily time frame chart, you can see the RSI has gotten close to overbought conditions, but hasn't quite reached overbought conditions yet. But either way, there is some stiff resistance up ahead. So pair that with the fact that the yen is heading into support, and there might be an interesting mean reversion trade in the Aussie yen currency pair. So that's something we can take a little bit of a look at. On the other hand, if the yen breaks support and the Aussie dollar keeps powering through, then we're going to just see a weaker yen. So on the yen side here, this is that support I was talking about. There's clear support in this region right here. Very interested to see whether we take it out. I mean, we're right on that neckline right now. If we do, I would expect a movement in the currency basket to take us back to the December 15th lows. So quite a sharp move lower in the yen, all things considering. And then in the Canadian dollar, you can see here we've broken below this support zone, and we're just kind of basing right now. So I do expect the next move in the Canadian dollar, although velocity was strong today, I do think the Canadian dollar is going to break down. So that's something else to keep an eye on. And then finally, I want to take a look at the dollar. Okay, so the US dollar, we're trading closer and closer to the next major target, which are the lows from the beginning of January in 2022. So that's going to be beginning of June 2022. So that'll be a very interesting level to trade into, right around 116 or so in the basket. What's fascinating here with the dollar is if I'm taking a look at the daily time frame chart, we've never gotten an oversold reading in the dollar basket despite this large sell-off. So I think, once we do see those oversold readings on the daily time frame chart in this basket, that's when I'm going to start becoming a little more convinced that we're very close to finding a bottom here in this dollar decline. Now, we don't need to go into oversold territory for the dollar to reverse, but I think that would be a very good technical indication of a bottom forming if we get that oversold region. All right, so real quick, just want to take a look at Aussie yen specifically. So taking a look at Aussie yen here, we had a large sell-off in 3 waves, traded back, found support from the May 12th lows right here, of course. And now we've started to bounce higher once again. Now, here's the interesting thing. If I'm taking a look at short-term momentum, look at this bearish divergence in the relative strength index. Okay, I mean, we peaked back on January 17th, made a lower low on the 23rd, another lower low on the 25th, and a much lower low today. All the while, prices have gone higher. So as prices have gone higher, the relative strength index has gone dramatically lower. To me, that foreshadows a potential strong reversal in the in the Aussie yen currency pair. The tricky thing is that right now there's no trade, there's no reason to go short this currency pair. I really would want the market to commit to me before I commit to the market. So what I'd be looking for on a personal basis, according to my trading plan, is a strong move lower in Aussie yen, followed by a controlled bear market rally, at which point I'll then be looking to short. So I think this is setting up nicely. The momentum signals are all there to look to short Aussie yen. I'm just waiting for the actual price pattern to appear on the chart. Okay, so that's what I'm looking at. So in conclusion, markets remain bullish. We're taking a risk-on stance. That being said, the volatility is not quite there on the currency side. It is there on some days, and then the volatility retreats. It's a very difficult trading environment, in my opinion. So absolutely, I agree with what we said earlier in the week. Focus on the currencies in play with an extreme emphasis on relative strength and weakness. And as always, pay attention to proper position sizing. All right, traders, that's it from me. Thank you very much for tuning in. I look forward to seeing you next week.